When it comes to renting a home or an apartment, it can be a lot less of a commitment, but you also do have a lot less freedom. This means that you're stuck with a lot of choices that your landlord makes, including most of the time appliances, upgrades. You can't change things in an apartment and you are kind of stuck. In today's video, we're going to be looking at 4 steps to go from renting that apartment or that house into buying your own place and finally living the dream of home ownership. The first one, really looking at 3 different questions. What is my credit score? Of course, being the first one. Now, when it comes to a credit score, 620 is the minimum credit score for a conventional mortgage loan. Now, there are a bunch of different products and services that they do offer where you could do an unconventional loan, but overall, the higher score that you have is going to yield you not only a better rate, but it's also going to be better terms for your loan. If you have a very good credit score as well, you could also be required to put a lower down payment. Now, of course, a credit score is something you want to monitor on a regular basis, making sure that your payments are made, making sure that your debt is minimal when it comes to credit card debt, and making sure exactly that your credit score is poised. And this is really easy to do if you have 4 to 6 months leading up to that home purchase with the anticipation of what is going to come down the road. Second question, how much do I have saved for a down payment? Now, of course, if you do not have that 20% for a down payment, they are going to require you to carry PMI. Now, PMI is private mortgage insurance. This is essentially a cost that you're going to have built into your mortgage until you do hit that 20% down. Now, what are you paying for with this private mortgage insurance? Essentially, you are paying for insurance just in case you default on the mortgage, so the lender won't be so far underwater because your private mortgage insurance will cover exactly what is kind of owed because, again, you're not putting that 20% down. So what exactly does that look like? In this area, looking at a home value of $250,000, you have to have $50,000 down, which of course is that 20%. But in addition to that, most of the time you'll have to have $6,000 to $10,000 of closing costs. So you could be looking at $60,000 to put down to get into a home with that 20% and also to avoid that PMI. Now, there are a lot, again, different programs that we kind of talked about that will allow you to get into a home without that 20% down, including a lot of those first-time home buyer programs that we do offered on really the state and also the federal level. So are you prepared for other expenses? When it comes to home ownership, it is very expensive. When you look at utilities, property taxes, repairs, maintenance, lawn care, upgrades, there's a ton of stuff that adds up when it comes to home ownership, making sure that you are really in tune with kind of the estimation of what it's going to be. You can do this through a couple different sites, just really looking at the estimation of even what utilities are going to be, where if you can pull the mortgage and the mortgage, let's say, is $1,300 to $1,500, you have to add on another $200 or $300 depending if your insurance is included, but also the utilities, again, depending on the total out the door price for what it is going to cost you for home ownership. This is why a lot of individuals will stay in the renting scenario for a significant amount of time because owning a home can be very expensive. And when you get in there, you have to know exactly what you're going to expect and know the cost. Now, the second step of this 4-step process is doing your homework. That is right. The more you know about buying a home and owning a home, the more considerate and the more conscious you'll be with the decisions that you make. Now, of course, this can make a big difference when it comes to your lender, making sure that you know the questions to ask because some lenders or even some real estate agents will not bring a lot of information really into light depending on what fees they charge, what upfront fees they have, exactly the fee structure. A lot of people can really get confused pretty easy if you don't know exactly what you're getting into. That is the reason why definitely doing your homework, going to a couple of sites that you know are really just filled with great information and you know it's accurate information. Now, of course, you can also look at a lot of local programs, a lot of states, as well as possible counties do have workshops. I know there's a lot of banks and credit unions that offer the same to kind of get you ready for the budget for home ownership, getting you pre-approved is that if that is the step that you're at. Also completing home inspections, finalizing the purchase, how the closing is going to look, and exactly what to expect. You should know before you even start this mortgage process. Now, the third one, looking at the big picture. Now, of course, as of right now, it seems like mortgage rates have kind of leveled out, But what does that mean when you look at the big picture? When you look at a renter versus a buyer, most people that purchase a home will live there 7 years is the average that we're seeing. So if you're at a higher interest rate, what are the chances that you're going to be remortgaging or you're refinancing this to go into a lower rate? Are you going to use it for some debt consolidation? And what does it look like in the next 3 to 5 years of this home ownership? And is it going to fit exactly what you're looking for? If you're, husband and wife, if you're a spouse, if you're a significant other, if you plan to have children, is the home going to be big enough to have it? Is it just going to be a starter home? Does it mean that you're going to get into a place, going to find out in a year or two that it doesn't meet exactly what you're looking at and seeing what the big picture is? And of course, you have to keep in mind the interest rates. Right now, 30-year mortgage rate is about 6.5% to 7%, which for a lot of people, if you're getting up to that $250,000 price range, can be very significant amount when you look at interest. But overall, when you look at a kind of crazy, looking at mortgage rates, even going back to 1981, the average in 1981 was 16.63%, which is kind of crazy. So if you're doing a 30-year fixed mortgage rate, they could go as high as 18%. Now, again, when you look historically at an 18% mortgage rate, kind of crazy to think that it was that high, but it makes the 7% that we're seeing today look pretty good. In addition, there are some additional loans when you look at ARM loans, when you look at adjustable rate mortgages, when you look at the fixed rate, there's a couple different things. Again, do your homework, know exactly what you're getting into. And the final one, don't be afraid to ask for guidance. This is one of the biggest things that first-time homebuyers really fail to really understand. Your home is usually the biggest purchase that you're ever going to make in your life. So talking to friends, talking to family, talking to people that essentially already own homes, what are some of the things you experience? What are some of the really the unidentified costs or the costs that you thought were going to be either higher or lower on average? Get a lot of the detail. Also knowing exactly where you want to look for a home can make a big difference because, of course, the tax structure, depending on the city that you're living in, can be different from literally zip code to zip code. From city to city, the taxes can be, 10, 20, 30% different, depending exactly where you are. But in addition to that, is you also want to make sure that, again, doing your research, you're looking at the schools, you're looking at the demographics, you're looking at, the value of the houses that you are. This, of course, can be brought by your realtor, really sitting down and understanding. And I've dealt with a lot of realtors in my time, and some of them do this incredibly well. What is the 3 to 5 year goal? Do you plan on having kids? Do you plan on an extended family? Do you plan on in-laws living with you? There's a lot of questions that if you have the proper realtor, they can go through. It is not just a transactional process when you're buying a home. It is really, like I said earlier, the biggest expense you're ever going to incur. So making sure that you have not only a full service realtor, but also a financial institution that has your best interest in mind. A lot of places do mortgages, pretty much any financial institution. Even when you look at online lenders will do your mortgage for you, but is it going to be at the lowest rate? Is it going to be at the best fees? What exactly are you paying for when it comes to this mortgage? So definitely looking at 4 steps that you have to evaluate and really think about when you're moving from the renting to the buying. And I'll catch you guys in the next video.